What's up, everybody? Dave Bartosiak here again for another edition of Dave's Daily Dive. Today, my friends, April 4th, 2017. Let's see what happened. So we're going to go ahead and dig into the S&P 500, take a look at the 10-year, look at oil, a couple of charts, and then as always, I have 5 Zacks Rank #1 strong buy stocks that are breaking out to the upside right now. So some short-term trade ideas. Let's go ahead and get it. First, S&Ps. So here we can see, as we've talked about before, you got this nice little bullish trend in the S&P. Came down a touch the 50-day moving average. If this number's a little bit off, it's because this is not the cash market. I'm looking at the futures right now, but this is easier for me to show you intraday. Anywho, little rally up, stalled out, 26 or 23.67 basically. Crept back down, higher lows here on Friday and yesterday and today. Higher lows, so that's good. But another inside day here in the S&P 500. So what I mean by that is the trading was fully engulfed by the previous day's candle. Okay, so it was just on the inside of that. So it really doesn't buck any trend either way. Looking at the commodity channel index, you see we've gone from oversold right up back here to the zero line. So if we can cross over this, that's going to give us some momentum to the upside. But I've seen plenty of times where this bounces at the zero line and continues on in this case, it would be in the negative direction. So continuing on to the downside. Let's zoom in a little bit and see what happened throughout the course of the day today here. I'm going to go ahead and throw back on one of our favorite indicators here, though, folks. And this is that good old-fashioned VWAP that we all know and love. Volume weighted average price is what that gives you. Okay. So we can see here bouncing around. Let me zoom out just a little bit so we can see this throughout the Globex session. Selling at the VWAP. Rally a little bit above it, then sold off. Comes down 2 standard deviations below it. Then we get a little rally at the open. Stalls out. Comes back down to test the lows around 9:15 Chicago time. Then it starts to rally higher a little bit. Comes back down, touches the VWAP again around lunchtime. Comes back again. So lots of chop. A very choppy session throughout the course of the day. And especially when you really look inside of these and some of these bars and just see how much it's moving. So from 23.53s to 55s, and you're just in the grinder from 10 o'clock here through lunchtime pretty much, and it's a lot of choppiness back and forth. Very tough to trade in the short term on that. Let's zoom this out a little bit. If we can look at the hourlies, and you'll see here again. Lots of choppiness over the course of the last several days. And here the bottom end of the range, 23.40. Top end of the range, 23.66. So a 26 handle range essentially is what we've been in since, the end of March, right? Just a few trading days, but still 3-4 trading days, relatively small range. And then today being fully engulfed in the previous day's range. That's interesting to see there. Okay, back out to the daily, and you'll see we can draw some levels here, give us an idea. You could say that little down day we had on the 27th intraday got down to that 23.6% retracement. And now I think we just chop in here. I think we're going to chop within this range for a little bit as the market struggles to find direction. That's the S&Ps. If you look at the Russell, little different story. A little bit of negativity yesterday. Today broke the lows, but ended up finishing the day just kind of break even right there in the middle. And again, this is a story we've seen. We're just kind of in this consolidation range, trying to figure out where to go. And if you look intraday, very choppy also, right? So So we get a rally. This is 5 o'clock in the morning Chicago time, so still during the Globex session. Starts to sell off again. Rallies up through the open. Back to the VWAP. Chopping around crazy. One standard deviation away from the VWAP, chops around, and then breaks down below. And just, I guess this move to the VWAP here that ran out of gas, that was probably the best trade of the day if anybody took it. And then rally back up into the close, but still didn't get over the highs of the day, lows of the day. We're just chopping in between. Chop City on the Russell. And that's what we've seen in a lot of these charts. And I suppose we can look at the NASDAQ too, NQ 0617. And you're going to see the NASDAQ just keeps on trucking. Just doesn't care. Shakes off the weakness that you see in the S&P or the Russell and just continues to break higher. And just keeps on going. So a lot of bullish behavior still in the NASDAQ. Again, it looks like the easiest trade of the day was this little fade back to the VWAP that got bought. But that's been the story. What about interest rates today? Intraday, this is the 10-year. So we see 10-year futures sell off. That means rates were on the rise a little bit today. And if we zoom this out a little bit, and again, this is priced in the actual 10-year. So as these prices move up, that means yields are coming down. So when you see this dip, that means the yields came up today. But still, we're pretty much at levels that we've been at 1, 2, 3, 4 times before, since election day. So a lot of choppiness, a lot of choppy behavior, same sort of thing, struggling to find direction. But this was not, today's action was not a reversal of Monday at all. And this could definitely continue on upward. And so that means as this continues upward, that is rates going down. So rates going in the opposite direction there of where you'd think given the Fed's policy. Okay, so what do you want to keep an eye out for is a breakout from one of these levels from somewhere, because there's just no breakout happening except for crude. Crude's moving higher. We could draw lots of fibs here. I have one little mini fib that's in there. That was on the intraday action. But if you go from February 21st high to the March 22nd low, we're pretty much right at the 50% fib right now. So it's make or break time here for oil. If it can push past that, then you get the 61.8 as the next level of resistance to the upside. But if this fib holds, then you've got targets well below here. I can adjust these for us. I can go ahead and add, in this case, it's going to be negative 38.2. Go ahead and apply that. And you'll see this well below, down in the low 40s. So that's the story that's playing out here in oil. But again, this is sort of a seasonal higher demand kind of time. I personally believe it's going to break higher through this 50% level. I think it retests these highs. So keep an eye on oil here. 51.33 essentially is that line in the sand. So it's going to be interesting to see what happens in Globex. All right, so that's the game plan sort of on oil, interest rates, things like that. Now let's go ahead and look at some individual stock ideas. So we've got Gain Capital. So here's one. Of course, this is like the forex company, right? And this is, again, a Zacks Rank #1 strong buy. Look at this bottom, election day bottom. Don't ask me. I have no idea why a forex company would be benefiting so much from, this Trump trade, other than interest rates being on the move, essentially, and or the dollar being on the move, and just currencies in general being on the move. That definitely benefits them. Found some support at the 50-day moving average. Continues to break higher. New 52-week highs. This is good too. I can go ahead now and add our volume to this, as now it matters because we're looking a little bit further out. Okay. So again, decent volume here. Breaking out to highs. Gain Capital, ticker GCAP. The next one we're looking at here is Hologic. So they are a supplier of diagnostic systems, right? Clinical diagnostics. So X-ray, bone, measuring equipment, and ultrasound bone analyzers, and all sorts of medical devices. And this story is a little bit different than what you see on the Gain Capital. This is really the result of sort of a longer-term, slower accumulation, it looks like, versus a spike to the upside and a retrace, right? So really, it's kind of just been fighting through these levels here. I like seeing charts like this because to me it seems like it's more sustainable versus a huge spike upward. You can see the commodity channel index has been on a buy since crossing over the zero line on February 17th. And then a pattern I love to see, the CCI coming down to the zero line and then bouncing. So you have that happening too, the bounce on March 22nd. So that's Hologic, ticker HOLX. Now we've got Nova Measuring Instruments, NVMI, Nova Measuring Instruments. Now these guys do, guess what, measuring for semiconductors. So semi's been hot. Anything related to semiconductor manufacturing has been hot. And you see this, I mean, just steady increase, keeps on going. Again, nice little spike here. Great volume too on March 27th. So I'd be a little bit worried here in the short term. If you're looking to size this one up, we can go ahead and take a look at a nice little fib level. So maybe this 50% at the 1760, 65, maybe that'll provide some support. Also, you got this high, this February high, 1833. So maybe just wait for this to come back just a little bit for you to load the boat on that. Plus, you've got the commodity channel index cooling off here considerably. Again, I like to see it when that touches that zero line and I jump on in. So that was Nova Measuring, ticker NVMI. Probably have heard of this one before, SodaStream. So these guys do that, sort of at-home, do-it-yourself soda machine. And they've been a real surprise this year, rallying sharply from the mid-20s. They've doubled since Election Day. You see this push higher, kind of stalled a little bit at the 52-week high here, but you do have just the beginning of this commodity channel index buy. So this is something I'd be keeping an eye on. I think that you could possibly go long here. Put your stops, really just below yesterday's range, right? You can just put it down here, nice and tight, see if it works out. If it doesn't, you lose a few bucks. It's not going to be a big deal, but this could push higher in the very near term. So this is kind of probably the most actionable idea that we have here. That's Zacks Rank #1 strong buy, SodaStream, ticker SODA. And I got one more for you, and you're going to have to use 5 call letters to pull this one up. That's Tokyo Electron. So this is an ADR. Only trade about 145,000 shares per day. And you'll see really a lot of that just the other day, right? A huge chunk the other day. I don't think so. I don't think all my volume data is filling in here, to be honest with you. I think this is maybe some bad data I've got here. But anyway, you can see the huge push upwards on through 52-week highs. This was really a resistance level, sort of this 26 level, broke on above that, looks to be pushing higher. They are in the chip business also pretty much, so they do, basically memory. So think of like a Micron, right? So something similar to that. And I don't want any of the nerds yelling at me like, no, they do, some specific chip. Yes, I generalize. I talk about stocks, I generalize. If it makes me money, then I care about it. If it doesn't, then I don't care. And you see here with the stock pushing up to 52-week highs, I don't really care what it does. But here is this consolidation range, sort of 24 and change to this 26 and change. So you can chase this and just place your stop just below this 26 and change level. So you can put it down to 26. Hope that provides some support on the way down, and there you are. So that was Tokyo Electron. All right, folks, that's another one of Dave's Daily Dives. And remember, if you don't already, Bartosiastics on Twitter, Bartosiastics. Why would I have such a silly Twitter handle? Well, because I got a silly last name. It's Bartosiak. So thanks so much for hanging out with me here today, and I will be back tomorrow for another one of Dave's Daily Dives. Have a good one.